If you trade crypto or if you have some type of income from a crypto business and you're living outside the US, you're going to want to watch this video. We're going to talk about how crypto is taxed in the US, the different levels and types of crypto, because you can buy and sell it, you can mine it, there's services related to it. So in this video, we're going to talk about how the IRS taxes crypto type income, how that applies to people living outside the US, and then how we can structure your business, especially for expats, so we're getting the best bang for our buck and saving as much tax as possible while following the rules, of course. If this is your first time watching, my name's Alex McGowin. I'm the owner of McGowin Tax, where we help individuals and small businesses solve international tax problems. Today, I was talking to a client recently that I've been working with for a long time. We have structured a business for him where he lives outside the US, he meets all the requirements for the foreign earned income exclusion, and he set up a company in Panama that he earns his self-employment business through. So part of his business, I guess he has two different things going on. One is he has a consulting business. Basically, he's getting paid for services he's providing while he's outside the US. So the way we've structured that is it flows through his Panamanian company because it's not subject to tax in Panama, because Panama has a territorial tax system where you're only taxed on income earned within Panama. So these are clients outside of Panama, so no Panamanian tax, and he pays himself a salary out of that Panamanian company, which is eligible for the foreign earned income exclusion, and it avoids Social Security taxes in the US because you have foreign company, foreign services, so it doesn't touch the US Social Security tax net. So in that scenario, he doesn't pay any tax on that at all. So that's his consulting side. The other side of this is his crypto business. Now, the IRS looks at crypto a little differently than maybe you look at it intuitively. So it's not a currency from an IRS perspective, it's property. So just like if you buy and sell stock or any other type of property, that's how they look at crypto. So if you're purchasing and selling crypto, if you're liking this video, you should really check out my newsletter where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. That can be a capital gain, long-term capital gain, or short-term capital gain if it's less than a year. Long-term capital gains get preferential tax treatment. It could be as little as a 0% rate in some cases, but a maximum of 20. Whereas short-term capital gains are taxed like ordinary income, taxed just like wages. Some people take that the wrong way and think that short-term income, because you say it's taxed like wages, that it's eligible for the foreign earned income exclusion, but it's not, because it's not earned income. It's not something you receive from the performance of services. You purchased a stock and sold it, and that's passive income. So buying and selling crypto, not eligible for the foreign earned income exclusion. If you mine crypto, that's a little bit different, right? And honestly, this confuses me a little bit, the way the business model works for mining crypto. But the way that I understand it, is you're purchasing assets, so equipment that are going to draw a lot of power. So you're going to have big expenses for electricity, and you have to pay host fees and things like this. Maybe you're in a group that you're paying for. But anyway, it's different than buying and selling an asset. In this case, you're actually buying an asset that's generating this crypto, and then you own it and you can sell it or something like that. So it's different, the mining scenario. So in that case, the question that came up is he had this mining business, and let's say it earned $50,000. He wanted to run that through the Panamanian company and also get the foreign earned income exclusion and avoid social taxes. Here's the problem with that. If the Panamanian company owns US assets, now it could have a permanent establishment, or in this case, since there's no tax treaty, a trade or business in the US because of the physical assets. So this equipment that's mining the Bitcoin is in the US. That triggers a US tax filing requirement for the Panamanian company. So now Panama company files a non-resident corporate return in the US because of the mining assets. So at the end of the day, if you start following the money around and the filings, first of all, it gets real complicated on an administrative perspective. We could think of a scenario where, yes, the Panama company has to file a US tax return to report the income on that mining business. But if we pay a salary out, it would be an expense to offset that income. So you might not get to extra tax, but definitely the administrative side of it is going to be more. The main problem, though, on top of actually having to file a US tax return for the Panamanian company, is that now you've lost the ability to depreciate those crypto mining assets. So the biggest benefit you get for this mining business is you have to buy these expensive machines. And if they're US assets, you can apply bonus depreciation. So right now, the bonus depreciation, you can deduct up to 60% of that asset today on your tax return. Whereas if it's a foreign company, you may not be able to do that, or it gets a little bit more complicated. The OBBBA, the One Big Beautiful Bill Act, actually extended those rules. They were set to go out at the end of 2025, or at least reduce, and they extended those rules. So the bonus depreciation, that's going to continue going forward. That's one of the bigger benefits, and honestly a bigger benefit than the foreign earned income exclusion would be in that scenario. So ultimately what we decided was keep the US business and don't run it through the Panamanian company, but also because that's now a capital intensive business, so the income earned from the mining business is from those assets and not necessarily just from the services he's providing, although he is providing a service. We set it up to where he's getting paid a commission directly out of that business that's directly related to the services he's providing, and that piece is eligible for the foreign earned income exclusion because it's related to services performed outside the US, whereas the mining business is arguably US source income in the first place, and there's a limitation on capital intensive businesses with foreign earned income exclusion. So if you're claiming the foreign earned income exclusion, if you're having crypto transactions, in particular mining, that can complicate a little bit how we structure your business, how we structure your income, and definitely how the foreign earned income exclusion applies. So if you have questions about this, reach out to us at McGowinTax.com. I'd love to have a conversation with you personally to see how we can help your situation, save you money on taxes, or leave a comment below. If you're doing crypto and you're outside the US, if your mining business is claiming the foreign earned income exclusion, I'd love to hear about the questions you have. Thanks for watching.